a round of applause, ladies and gentlemen. Our panelists for hotel development trends, growth and outlook, along with the moderator, Akash Datta from HVS ANAROCK.
This is the final panel for the day. No one is applauding for us, guys. Apologies. But thank you so much. And what a panel we have of development heads who've braved 2 days of our conference over here and have graciously joined us to talk about their development efforts over the years. And what a year it has been. At HVS, when we did our last count, approximately 300 hotels were signed in 2023 under various formats, largely under management. And it's been a wonderful year. But I wanted to take a minute with each of the panelists over here, starting from the ladies. Left, Suma, first you. If you could just share with us how was 2023 for you, and going forward in 2024, how's the winds looking like?
Hi, good evening, everybody. So 2023 was a great year of records of sorts for Indian hotels particularly. It was a year of great performance across all parameters as a company. We crossed enterprise revenues of 10,000 crores in India with a PAT of 1,000 crores and free cash flow of 1,000 crores. And on every parameter, whether it was on EBITDA, margins, returns, we just excelled on every count. As far as development goes, in terms of growth, last year was again a great year with 36 signings. We signed 36 hotel contracts. Probably it was industry leading in the country. And it was, we signed contracts across all brands and across different geographies. So it was quite well distributed and well spread. So that was how the last year was. And
2024?
This year has also been, we had a great start. And as on date, our financial year ends 31st March. So we have signed, now it's like counting because we signed something yesterday too. And we crossed almost 28, 32, 14, 15, about 50 signings this year. So
wow.
That's how it is.
That is a strong rise, Suma. Selena.
So good evening, my name is Serena. I'm from Ascott. So Ascott, we are a global operator with a head office in Singapore. So in 2023, we signed 30% more deals than we did in 2022. But I think in 2023 was really interesting for us because I think that the pandemic also showcased service apartments as a very resilient product. And because of that, it has allowed us to sign more service apartments and also to be able to define what they are and to clarify what that product is. I think historically, when someone thinks about service apartment, they think that it's associated with long stays, couple of months, 1 year. But in actuality, it's basically a self-contained unit with hotel facilities. So we were able to redefine the space. We were able to redefine that service apartments are not just for long stay, it's also for transient. And it can go into every sort of destination. So with 30% increase of signings from 2022, 2023 was a fantastic year. In 2024, we started on a very strong note. We just signed 2 Oakwood deals in India.
Congratulations.
Thank you. We also opened, quite a number of really stunning properties around the world. For example, in Japan, also in Australia. So we're off to a good year of signings. In addition to service apartments, we also see that experience-led social living through our Live brand has also been highly sought after. Because, with the travel patterns, people are traveling. There are a lot of solo travelers. There are a lot of travelers who want to meet new people. And that's where the experience-led social living comes into play. So, after a good year this year, and also very excited that we are able to introduce new asset classes into the lodging space, in addition to the hotels and the resorts that we also operate.
Thank you. Elie?
Hi, I'm Elie from Radisson. I've traveled 230 days in 2023. It was the most hectic year in my professional career, I must say. And we signed 230 hotels in 2023, which was almost one hotel per trip. Very hectic year, very exciting year. Somehow very different year than the previous years. It was the first year that we fully recovered, all of us in the industry, post-COVID, because 2022 we started the recovery, but it was really established in 2023. Global tourist arrivals almost went back to 80%, more or less, over 2019. So strong recovery across the industry overall. Really exciting for us from a growth perspective across the brands, especially in India. Today we have 165 hotels open and under development. We signed over 20 hotels last year, and we hope to continue growing that footprint. But also a lot of industry trends in 2023. Interest rates remained high, inflation remained high, which put some complication on organic growth. Probably we need to innovate a bit more as we move along. A lot of investors are coming to the industry across the world. A lot of new players, a lot of appetite. On the other hand, in 2023, the banks, the lenders, were very excited about the industry, but at the same time not too committed. So there's a little bit of an issue on the lending side. Development-wise, we saw more resorts, urban resorts and destination resorts in 2023. We saw more conversions, more extended stay. So really there is a little bit of an evolution that we had witnessed in 2023 in the type of hotels that we were developing compared to the previous years.
Thank you. And that 230 was for at the global level? 230 signings was globally?
Interestingly, we signed much more deals in 2023 rather compared to any other years. Although global transactions by the investors didn't go back to 2019 levels, operators generally signed much more deals than 2019. At least we had. We were blessed to do that. But I still believe that the industry, from a transaction perspective, had not recovered yet to go back to 2019 level. And what I mean by transactions is people buying hotels. There has been less people buying hotels in 2023 compared to 2019. Probably that was mainly because of interest rates.
Got it. Dhruv?
Thanks, Akash. 2023, I would say, was a bit of a mixed year for us with the passing of our Chairman Emeritus, Mr. P.R.S. Oberoi. And I think the industry lost an icon. Business-wise, it was a great year, one of the record years for the Oberoi Group, for EIH. If you followed the Q3 results, which was very recent, revenues were up by 30%. Profit after tax was up by almost 80%. So it was a record year. And we continue to see that this is going to, this trend of revenues and profits increasing should stay, not just for us, but for the entire industry in India. As far as development is concerned, as you're aware, we own hotels. 80% of our hotels are owned, 20% are managed. So we are building hotels on our own balance sheet. We hope to open 2 new hotels by the end of this year. We have about 10 hotels across the world, India and overseas, that are in our active pipeline. And we are quite busy exploring many other opportunities for growth.
Thank you, Dhruv.
Thank you.
Clarence, sorry.
It's okay. Hi, everyone. I'm Clarence here, and thank you for this diverse group. And before I answer anything, I'd like to wish every one of you here Happy Lunar New Year. May you have a happy, prosperous, and tremendous Year of the Dragon. This is the 7th day of the Lunar New Year, and in Chinese tradition, it's everyone's birthday. So I'd like you to wish your friends on the left and right happy birthday. Yeah, 2023 was a fantastic year for Hilton. We announced our results last week. It was a stellar year. Globally, we had 1,000 hotels sign up. Over in this patch in Asia Pacific, it was 251. It was really a telling year, like all my learned colleagues. It was a very busy year indeed. But what's interesting is the outlook, right? In 2023, Hilton launched 2 new brands, Sparks by Hilton and Live Smart Studio. So this is to capture more of the demand trends coming out that we see in the US, and we'll monitor how this goes before we start to bring them into this part of the world. But what's exciting is actually here in Asia Pac. In Q4 alone, when you look at some of the stats, there were about 1,977 hotels under construction. And I look after Asia Pacific, and the top 5 cities are the usual suspects that we saw the last 2 days, whether it's from Google or from HVS. Bangkok, Phuket, KL, they all come up as top performing cities. But here, if you aggregate all the cities and all the provinces in India, you form 26% of all active pipelines. There are a lot of active stats, like 156,000 rooms now. Of the 26% pipeline, India has about 500 hotels and 61,000 rooms, right? Hilton has the smallest beginning. We have 25 trading hotels, as what Alan said yesterday. But we had a stellar year by our own standards. We had 7 signings last year. And we started to introduce new brands here to India as well, right? We signed a Curio, which hopefully will open towards Q1 next year, and our very first Waldorf Astoria here in India. So very excited indeed. 2024 is a tug of war between me and my head office. I really want to negotiate my budget down, but they won't accept it. So we look at a bullish year ahead, looking at just the trends that you see, everything that we heard the last 2 days. Outside of India, Asia Pacific remains a bright spot. So kind of bullish at the moment.
Thanks, Clarence. And while at the backstage, when I was having a conversation with Clarence, he mentioned that in Asia Pacific alone, they signed 250 hotels. Along with Elie over here, you've got 2 companies that have actually signed nearly the same number of hotels that all of India signed last year. And that is an amazing fact, and also provides a sense of the opportunity and the growth that is available. But Suma, coming to you on the launch of your Ginger, congratulations on that. It's a fantastic hotel, still to visit it. But is Ginger likely to be the next stage of growth for IHCL? And will it really be the defining moment for economy in the country?
So Ginger has had an evolution in an entire process. It has really evolved, I must say, and our current Ginger, which we opened a flagship Ginger in Mumbai, is a reimagined Ginger, which is also one of our largest Ginger hotel with 371 rooms. And the entire launch and the performance of that hotel has been very interesting and very promising. We actually broke all records, and within the first year, we had generated profits on that hotel. Today, it's been just 2 months, and the hotel operates at more than 85, close to 90% occupancy at rates upwards of 7,000. Wow. And this hotel is unique in many ways because this is not only reimagined in terms of the offerings, this is our first cuminization of Ginger, sure. And our managing director spoke about it today morning. So this is what we call as lean luxury, so luxury at affordable price. And we are quite excited on many counts. One is the performance of this hotel. The other important thing is we have 4 Gingers in Mumbai within a radius of 3 to 5 kilometers, and it has not cannibalized. Every hotel is doing 80+ occupancy, and there has been no rate drop. So we are quite encouraged by this, and we feel there is huge demand for multiple Ginger hotels in metros, mini metros, and tier 1 cities. And the hotel has the potential to travel to even the 2nd tier and 3rd tier cities in the country, where we see huge demand going forward. In fact, on back of the success of this ginger, we have already signed another big box ginger in Goa, near Mopa Airport. It will be a 300 to 350 room ginger. That will be our second largest hotel. There's another ginger, 250 rooms that we will be opening soon, towards the end of this year or beginning next year in Goa. So, and another 775 room combo hotel in Bangalore at the Bangalore airport. So there is tremendous opportunity for this ginger brand to grow. And we feel there is potential for a ginger in every district. At least one ginger in every district, and of course multiple gingers in larger cities. So the last count of districts was 766 districts in the country. Wow. So there's potential at least to do 1,000 ginger hotels. So that's the kind of potential we are looking at for this brand.
Excellent. And thank you. Which brand in the country today do you think will compete with ginger going forward?
Well, there are many hotel brands that compete in the upper and mid-market segment from, I think, every chain, both international and domestic, whether it is the Ibis or the Holiday Inn Express, or even domestic brands like there are Sarovars. So there are many hotels, and we compete with these hotels across, I think, different markets.
And I'm fairly confident Clarence here and Elie as well would love to know what's the model to grow such a brand through, because you've been very successful with ginger.
So, unlike some of the other hotel chains, we follow a operating lease model. So for gingers, while we don't rule out management contracts, but our whole approach is to take fully fitted leases on longer terms. So we take the entire business risk on our the P&L risk, and that's the way we would really like to grow this brand.
Thank you. Elie, coming to you. In my conversations with your team over here in development, they mentioned that you created the Radisson individual retreat brand in India during the pandemic. And that's a fact that wasn't known to many people. At least I didn't know for a very long time. But congratulations on that. You're probably the first international company to do that in India. What really inspired that creation, and how's been the success of that brand since then?
The thinking behind any of these creations is the need for any business or any hotel company to stay relevant to its stakeholders, and that is the owner and the guest. And our job is to ultimately create more possibilities to our guests and opportunities to our owners. And it's that thinking that has driven the creation of not just Radisson individual retreats, but also Radisson individuals and an array of other initiatives that we have undertaken in the last few years. Radisson individual retreats was nothing but the idea or the concept of providing an opportunity to the domestic customer in India, and India is predominantly domesticated from a demand perspective, at least for the time being, to go and explore himself or explore the beauty of India and take advantage of all of the lovely, beautiful resorts, small resorts that can connect you with nature, that can reconnect you with the community, or that can sometimes reconnect you with yourself. And that was something that obviously everybody was in need for post-pandemic, but at the same time give the owners of those resorts or facilities to be exposed or have the ability to be accessible to the consumers and have them on a global platform. That was the very basic concept behind it. It has proven to be reasonably successful. We have to we live and learn, and we're learning as we progress. It's nothing that we're not used to doing that. It's a new business model for us, but we live, we explore, we learn, we improve, and we move on. And Radisson Individual Retreats is a derivative of Radisson Individuals, which is a brand or a soft brand that we created post-pandemic for the same reason, but more on an international scale, which today has around 70 to 100 hotels. But the journey doesn't stop here. Every year, every moment, as an industry, as individuals, as leaders, we have to continue evolving ourselves, innovating to be able to stay relevant to the guest and to the owner.
Well, thank you. Taking a lead from that, Clarence, I heard that Hilton signed a strategic deal with small luxury hotels of the world, right? That's odd. Hilton, the giant, looking to do a deal with small luxury hotels. What's the thought behind that?
Well, we've been looking at ways to basically reward our Hilton Honors members, 180 million of them globally. And this is an opportunity for us to expand our network for our luxury customers to foray into the world, all the beautiful resorts small luxury hotels has to offer. We operate in a very different model from them. They are usually smaller resorts in slightly more remote locations that you'll normally find a Conrad, Alexa, or Waldorf Astoria. And our customers has been telling us they wanted to experience different models, and it allows us to exchange our customers from their invite customers to our Hilton Honors program. So this is a collaboration that we are experimenting for now, and we believe that it's a win-win model for everyone, especially our Hilton Honors members.
And will it extend to development as well?
No, good question. So we run as two separate autonomous companies. So small luxury hotels will continue to be in charge of their own growth, separate from my team.
Excellent, great. Dhruv, you know, Oberoi is someone who's pioneered small luxury hotels, to take a word from there. What's really the development plan going forward for Oberoi? Are you likely to stay with the same number of brands that you have? And is it going to be still luxury within the experiential space for you guys?
Yes, I think along with the Taj Group, Oberoi has been a pioneer to establish luxury hotels in India. Even at a time when India was not a luxury market, we didn't have the kind of infrastructure, roads, airports, etc., to really build hotels for a luxury traveler in a market that was not really supporting luxury was, I think, very bold, if I may say so, about 30 years ago, 40 years ago. And not just in India, Oberoi Hotels took luxury hotels beyond India to various markets in Mauritius, Egypt, Indonesia back in the 70s, and more recently in Morocco, where the Oberoi at Marrakesh has been rated the best hotel in the Middle East and Africa. So I think luxury is in the DNA of our company. About 30 years ago, a new brand was created, Trident, which is an upper upscale brand. So we do have two brands. I think we'd like to keep our focus on what we do best, which is luxury and upper upscale. So there is no immediate plan to have another brand, so to say. But within the ecosystem of these two brands, we will continue to adjust in terms of the programming of the product. So if it has to be a small hotel, we do have a small hotel in Ranthambore, which is only 24 keys. That's
the
very,
Vanevillas.
The Vanevillas, it's only 24 keys, and that was built over 20 years ago. It drives very high ADRs, very healthy profit margins, and that is a space we understand well. So probably we will continue to have more of those, set in idyllic locations, more immersive in nature, more rooted to the place where it is. You know, these kind of pictures are very inspiring for such kind of hotels. And we will continue to do that, but not to say where there is an opportunity for a large Trident. We do have large Tridents, 400, 500 keys. We'll do that in cities. But definitely, I think there is a headroom for us when it comes to luxury resorts in India and overseas.
Great. Changing gears slightly, Serena, you know, Ascot's well established on the extended stay segment. Here in India, we've not really seen too much of growth on extended stay. Right? So what's really driving Ascot's passion in the country today, especially in the extended stay side?
So, so Ascott is, we operate across many different asset classes, as I mentioned before. I think that, Ascott has also, we are now at 162,000 units, 900 some properties worldwide. In India, we have, 6 operating, 2 which are opening in the next month or so, another 10 which are, under pipeline. So when you start thinking about this and our size and, what we can bring, to India, I think we're very excited about that. Now, service apartments is a very interesting asset class. Thank you.
It does shake everybody up, right?
So service apartments is it's a very interesting asset class. And post the pandemic, it has shown that it is seen as a mainstream asset class. And there are many hotel owners who are also very interested in investing in it. And so I think that given what we know about what's happening in India, the fact that there's this whole inflection point whereby there's so many more people traveling, domestic travel is on the high, outbound travel is on the high, that Gen Z and Gen X, the generation in India is the largest globally. When you think about these stats, there is the ability to bring in, interesting concepts, new concepts into India, because travel patterns moving forward is going to be very different. And I think that's where, Ascott sees ourselves in terms of having the experience managing across 5 different asset classes, for us to bring in new ideas, for us to bring in new products into a market, which is evolving. I think it's really exciting, for us. And I think that's where the joy is. There's a lot of fallacies about, service apartments, from a length of stay, from a size of units, from whether it can be studios, all these fallacies, which for us are fallacies to be broken, and everything really has to be based on what the consumer wants and what is the best return for the owner. And again, Ascott, our roots came from an owner. We were a developer. 10 years ago, 43% of our pipeline was third-party operated. Now it's 80%. So our roots is owner-operator. Our roots is a developer. And hence, when we start thinking about how we go into different countries, how we bring our assets into different countries, is also based on an owner mindset to ensure that not just from a consumer point of view, from a brand point of view, that the whole tripartite actually makes sense.
It's funny how time flies, right? We've got literally less than 3 minutes left, and I really wanted to have continue our conversation, but I just wanted to leave each one of you with one trick question, which I didn't share with anyone before. Development here has been great, but what's been the challenge for all of you in 2023? One challenge which you've faced in your development efforts. Suma, I'll start with you again, which you could share with us.
Well, one challenge for development, I think there was honestly no challenge that was insurmountable. And you can list down many challenges, but sure. I think the rate at which we have grown, we have figured out how to handle them. So I wouldn't really say any challenge that was insurmountable.
Great. Serena, for you?
So 2023 was a crazy year for many of us. And there were very, interesting projects come our way. There were, huge mixed-use developments. There were greenfield projects, conversions. But at the end of the day, I think the challenge is that, we always have to remain rooted in prudence and doing, something which is sustainable and something that is also, creating value, not just in the short term, but over a longer term. So I think one of the challenges is that, continuing to that the challenge for us sometimes we're so excited about project that sometimes we go like, wait a minute, let's do the math. Let's make sure it makes sense for all the various parties involved. And that's the right thing to do. Because when you're in this whole fire of like, whoa, all these signings that we can do, sometimes you get carried away. And sometimes you go like, hey, let's take a step back and let's, drill down to the basics. And does this really make sense, for all the various parties involved?
Correct. It's important because the relationship is going to be for a very long period. Elie, for you, you've been clearly on with the suitcase for 250 days.
I think I would just elevate the thinking a little bit more. I don't think it's something specific or peculiar, but general. The challenge has always been trying to overcome human greed. By that is just not just for us, but also for the other party. That's always a challenge, trying to make sure we create that balance, make sure you take and you give. And that has been the challenge, not just recently, but throughout. But also another challenge probably is to try to make sure we as a company create a culture that tolerates mistakes so that we can promote innovation and creativity. This has always been something that we aspire for, but that has equally been a challenge.
Great, thank you. Dhruv?
Well, I think I would mention really about the luxury space. And even though if I look at last year and this year, rates and RevPAR has grown by about 20%, more or less. I think that should be for everybody in the industry. But really, if you look at how many hotels in India are driving ADRs above $300, especially in the cities, keep the resorts aside, very few you can actually count on your fingertips. And I think that is a real challenge when you're trying to build a hotel and then you see that your projections don't stack up, because India is still not giving the kind of returns one would expect for the kind of product and the service which is being offered to the guests. So I think that is a challenge, but like I mentioned, rates and RevPARs are improving. Let's just hope that it continues to improve so that we have better returns, at least in the luxury and upper upscale space.
Great, thank you. Clarence?
Well, through the pandemic, the most important thing and the most painful thing was losing our team members. So people remains our biggest challenge. And over at Hilton, we recognize that true and true. So we've been focusing on our talent pipeline, our attraction pipeline, the way we recruit and the way we train and retain our talent. We work very hard on our culture, and that's why in 2023, we actually won World's Best Workplace. In India, we hand over the mantle to Zubin as #1 workplace in India. So people remains my biggest challenge, because we may sign many, many hotels, but all of us here have a responsibility to recruit the next generation of future talent, future hoteliers who will sit with us in this room that we call bosses. So the challenge out there is to attract more people into our industry.
Great. Thank you. Thank you so much. Thank you, everybody. Please, a round of applause for our esteemed panelists over here.